Good morning, trading world. It is December 6, 2021, 7:40 a.m. Up a little early this morning. Hope everyone had a great weekend. And this is my pre-market outlook for the SPY. The title of today's outlook is Christmas Rally Possible Flaky Start. Too soon could equal fail. I'm going to start today off just as I did last week, watching or keeping my eyes on market leaders, which will be Apple, nvda, Tesla, the XLF, Amazon, and Google. If they hold and rally, so does the market. But if this rally fails, this is where you will see the signs first. I do think we get a rally. However, if it starts a bit too soon, like today, just remember what happened in December of 2018. For those of you who don't, go back and look at your charts. We got a head fake rally, and right around this week or next week, we kind of rolled over and we didn't hit the low until Christmas Eve. So I have that in the back of my head that this could play out just like December of 2018. And it's lining up pretty much that way. All right. Key levels to watch. Let me bring those up. All right, here we are with the key levels to watch for the day. Resistance levels start at 456/457. Then the Queen resistance level is going to be 458. King resistance level is going to be 461, 462. Support levels. We have the Jack support at 453/452 area. The Queen support level at 449/448 area. And then the King support level is at 442. I know that's very ugly. I should have cleaned that up a little bit, but 442. So, the battle zones for today. I expect a big battle at 454. We break through 454, we definitely go much higher and possibly test this 461 or better, which says we are going to rally over the next 2 days or so. I mean today and possible tomorrow. And the battle zone to go lower is definitely this 452 area. We break through 452. We're going to go back down and revisit the lows on Friday. And if we break the lows, I consider this a trap door. If we break through this trap door, we fall a good ways. Somewhere down toward 442 is being the next level of support that I see if we break through this trap door here. And I should say the trap door is actually, well, this is the trap door. Because we've already kind of touched below, but we hadn't closed down in this 448 area, but we've touched it. So this is the trap door. want to be very, very careful when it comes to the rally. It is possible that we get this head fake rally over the next couple of days, taking us up toward 461, 462, and I think the highest that we would try to play for is going to be 464 on the rally side the next couple of days. But you never know, we could gain some steam. The buy the dippers could step in and force and actually help us gain a lot of steam and push a lot higher. But 464 is where I see the ultimate target for a rally right now. I'll probably have some clarity on that coming into tomorrow, but that's what I see so far, because this has this eerie feel of December 2018. I'm sorry, it does. They say history doesn't repeat itself, but it sure does rhyme. So I see some rhyming coming. Let's get into the scenarios for today. Let me bring those up. All right, the first scenario that I see happening today would possibly be what I like to call a Trange day or rounded reversal. It is a variation of a trend day, but what we see happening here is that from the opening we sort of take off and head straight toward the resistance of the day, which will be somewhere between 458 and possibly it's 461, 462. One of these areas will likely be that midday chop resistance that we aim at. But during that midday chop, you're going to see something that happens kind of strange. If you have a keen eye, you'll notice it from about the opening. If you're on a 5-minute chart, you'll notice that after the first bar, volume will diverge, your indicator will diverge away from price action. So that's going to be your key sign that we can kind of have a decent reversal the second half of the day. Coming in, looking at this chop. And the way to play this, I know we're going to have an up move, but right now buying straight calls are not your friend. Volatility is too high, and the likely thing that'll happen if we get a crush in volatility, as price goes up here, volatility comes down, it sucks the juice out of the call. So even though you're getting a great move going up, it's not going to reflect in the call because so much premium in the calls are built up from volatility. So with that volatility sucking out, that call is not the best way to play a rally. And the best way to do this is going to be through some type of bull call spread or call vertical, where you buy the low strike, sell the high strike, which is going to be your target. If you're able to get in down here at 454, when price is at 454, you're going to buy the 454, sell the 461. That's going to give you some protection against the volatility. It kind of evens it out. So you're able to capitalize on price action without getting that negative departure of volatility on the rally. So that's going to be a key thing of playing the rally today if we see one. puts, if you're playing the downside, puts are always easy to deal with. It'll actually be better for the put, because up here, if you buy at the right price at the right time, that vol would have crushed and we would get some volatility coming back into the puts on this down push. So buying straight puts will be just fine. However, because we're in this likely not sure whether we're going to rally, not sure whether we're going to fall, buying bear put verticals are a good idea because it further defines your risk. Instead of buying, because volatility is so high, instead of buying a put for $400 or $500 up here, it's a lot easier to do a put vertical where you can get, probably price it somewhere between 100 and 200, and that way you can take advantage of most of this move. So it's definitely not a bad idea. So that's what I will be looking to do to take advantage of these moves. And let's get to the next scenario. Here we have scenario number 2, which is likely a trend up day structure. We open gap up, but while opening gap up, when it comes to the cash open, we fade back. And in that fade back, we normally find support at or before the previous close. The previous close from Friday was 453.42, so we should find support somewhere in here, and likely at 454 get some sideways chop. It's likely to find support somewhere in that 454 area, and after that sideways chop, we take off, giving us a morning uptrend, or those primary hours, that 9:45, 10 o'clock hour, all the way to 11:30. We get this very nice uptrend, and that could take us to possibly 458 or 461, 462 area. That's where we will likely find resistance for today. We'll get our sideways chop. However, your internals should confirm the move, so they shouldn't be diverging, or especially on this move here, they should be confirmation or in unison with the move here. And we'll get a slight fade toward, or in the second half of the day, probably back toward this 457 area. That will be a trend day up structure if it happens by the book, but there are variations to it. But that's what I look to see happen, and it could very well possibly be the strongest scenario for today. You will notice I do not have probabilities up on today's scenarios. Number one, I'm building an Excel spreadsheet, which I had working, but got some bugs that kind of popped up yesterday and this morning, so I couldn't get everything worked out in time enough to get everything lined up. And a lot of what I do, it takes a lot of time and effort to put the mathematics and put these things together the way that I do. because I'm not just doing it for the SPY, although the SPY is what I post. It just wouldn't be enough time for me to make it presentable enough to do more. But hopefully the spreadsheet will help with the time. So I'm not a Excel genius, so it does take a lot of time for me to put that, or a coding genius for that matter. So been soliciting help for those matters, but it's neither here nor there. This is scenario number 2, which will be the trend day up structure. Let's look at scenario number 3. Scenario number 3 could pretty much be a jumbled range day. There are so many variations to a range day, it's impossible to plot out each variation, but the gist of a range day is that you usually establish a range high and a range low, and you basically chop back and forth between them. But with as high as volatility is, we get variations of the range day where you establish a range high and low, and we push those boundaries, where even though we may establish a range low here, we could push up, and then we could push the boundaries of that range to a lower support level before chopping up and going higher. And then the same at the top end. We meet the resistance level and reverse on the reverse level, on the resistance level, before finding a mid or median area in the range and testing resistance, and not only testing but busting through it to find a higher resistance, which is what I mean by pushing the boundaries. So right now, that established low of the range could be that 452 area, and the established, or the second established high could be around that 458 area. But you look for it to push those boundaries. So on the range day, things that will help you, because using the moving average for support and resistance are very futile in effort. This is a day for your things like Bollinger Bands, or your channel indicators. They help you out a lot on range days. So that is what I see for today, or what I will be preparing for today. Again, I don't have probabilities up on the day map scenarios, so let's be prepared for all 3 scenarios. Again, it is always a great idea in times of volatility like this to operate within very risk-defined strategies. Again, the best way to take advantage of today, especially if we get a trend day or Trange day, is if you're going to go to the upside or take advantage of the upside, it will be best practice to use a bull call spread. Again, that's when you buy the low strike and sell the high strike, which is usually your target, because volatility will wreak havoc on calls if you try to buy straight calls during a time like this. Especially if we get any type of movement, big movement in volatility. Excuse me. But again, it is always best practice during this time to use very or risk-defined strategies. As always, wishing you a very profitable trading day. You have a great day. See you soon.